Morning, everybody. It's Tuesday, the 19th of May. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Morning, gents.
Morning, all.
Morning.
All good?
Yeah,
Oh,
you?
good in the hood, yeah.
Yeah, absolutely. Sun's
Right.
out. Looks like
Sun's
a lovely day ahead.
Sun's out, guns out.
Yeah. I've already taken the dogs to the groomers actually this morning.
Have you?
Yeah.
Did you ever groom yourself? You're looking fresh.
Yeah, you know, sort of like do my little bit to keep everyone entertained at home.
Nice.
Martin commented on your goatie's gone.
Yeah.
Oh no! Everyone just like said, "Oh, I'll really enjoy watching it, especially Joe's goatee," and now it's gone, and now we're going to lose all the viewers.
My lovely wife had a word with me on Friday. Said you look like a mess. Go and sort yourself out.
She hasn't seen Ian.
I was going to say, our wives have been saying that for years.
I don't think I had a shave. Sorry, I didn't have a wash for 3 days as well, which didn't help. So she was.
That's not good.
Yeah,
especially if you're
proper let myself go.
Just went for the tramp status over the weekend.
Stinky. Yeah. Hello, darling.
You must have finished your book by now, haven't you?
Oh, nearly. Yeah, not far away. I was distracted. There's a podcast on it as well. I'm going to listen to as well. Fascinating stuff.
Yeah, good.
Okay, so rampant markets yesterday. Very much risk-on environment.
Mental markets.
Yeah, so a lot of trends that looked as though they were potentially rolling over following a strong move. Just had another kick higher or lower, depending on which way you're looking at them yesterday. Ian, do you want to do some FX roundups?
Excuse me. So first chart is obviously the dollar index. So as Joe was saying, risk on yesterday. So risk on normally means the dollar moves to the downside, and that's what we've seen. I still think this is a channel formation. I'm not quite sure whether or not it could be if I squinted really hard. A triangle, but it has a bias to break to the downside, put it that way, whatever it is. But I do believe that we're going to possibly see some dollar buying again this morning. So it was risk on. So we saw the dollar move to the downside. So euro dollar cable to the upside. What we did also see yesterday was, as far as the news is concerned, is that Merkel and Macron got together and they have agreed a €500 million stimulus package for suffering countries in the Eurozone. And why people are saying that's quite important is because it will come out of the EU budget, and obviously Germany are the main contributors, so they will be wearing the bill, basically.
Is $500 million enough when the US are chucking trillions around?
Well, oh no, sorry, not $500 million, 500 billion.
Right,
sorry.
okay, I was going to say.
Yeah. $500 billion, isn't it? $500 billion.
Yeah, just
Dr. Evil moment, wasn't it? £1 million.
$1 million. So let's have a look at the charts. Euro dollar, moving up towards that alphabet channel top. So it's just going to go like that. Look, that's all you do. Just move that over. So some resistance at 109.57. We've actually got short this morning here at 109.22. There's an exhaustion count on the hourly chart in euro dollar. Cable, we talked about this yesterday. That looks like the completion of an AB equals CD formation target, and we're moving to the upside. Pardon?
Sorry about that.
Am I boring you?
Need some coffee to wake me up.
And then dollar Swiss is just in a massive great triangle, and we're trying to buy dips today. What I think will be quite interesting this morning is the Jew survey, and looking at most of the euro crosses, which I'll talk about when we go to gun to the head. I think euro buying looks a little bit exhausted at the moment. That's me.
Lovely.
Okay, cheers, Ian. Steve, do you want me to have a go, or you want to have a go?
Yeah, you have a go then.
All right. Okay, so let's just talk indices. So this risk-on move, as we discussed, continued yesterday. It's been a monster move from these lows that we saw on the 14th of May, and really sort of no checking back whatsoever in some of these markets. This is the DAX. This is the hourly chart, and it's rallied into what we've looked at today is an 88.6% retracement, so a big overshoot to the upside. Hasn't managed to go and test the highs that we saw on the 30th of April, and seems to have stalled at that resistance at 11,207, which is where we had our short today at 11,200. I was feeling a little bit anxious about that. Didn't really want to sell it again, given how strong it's been, and 88.6 is not a widely looked at fib level, but it seems to have done a job so far.
Nice.
So very minimal drawdown on that, which is quite nice. So
what was the high, Joe?
High was 11,232, so 32 ticks.
Lovely.
A much wider stop loss than what we'd normally use today, given the recent volatility. You've got 160 tick stop on that, which isn't great, but I think I'll probably look to pull that down now to just above the high. So I'll do that once we've finished today. FTSE, again, big move from the lows, but in this instance, what we've seen is a test of the underside of this broken channel. I know Ian's a fan of retesting channels from the underside, and we've also got a 78.6 that marries up with that as well. So, and engulfing, again, we've triggered on a sell on that. So I went quite aggressively on the indices today. Again, a little bit of an overshoot, but looking pretty nice on that at the moment. And again, I'll probably look to bring the stop down. Looking at the CAC, that's appears to have failed. No obvious level there to look for a short. So I was looking at actually buying a dip on that today. We'll see if it gets there. On the American markets, they're just as rampant as ever. Nasdaq smashing through that high from the 12th of May and on its merry way. Not a lot can stop that thing at the minute.
No.
Dow Jones is not as impressive. All these head and shoulders that we looked at previously have been invalidated. Looking now for a test of that 24,903 level, which was the high from the 30th of April. And the S&P did make a marginal new high above that high that we saw on the 30th of April, but appears to have rejected that today. So might have suckered a few people in or taken a few stops there before reversing. So we'll wait and see if there's any follow through to the downside. I think we do need to see some sort of check back in these indices, because it's been, as I say,
it's madness, isn't it?
Pretty mad move to the upside in recent days. And we've talked about what's boosted that. There has been talk over a drug from China, was it? Where was the name of that?
Yeah, Trump's had a go at something, hasn't he?
Moderna. There was a drug called Moderna, which is helping push stocks higher. The drug has managed to produce antibodies in a group of healthy volunteers. Trump weighed in yesterday saying he's been taking some malaria drug, which hasn't proven to have any effects, but he thought he'd talk about it as a preventive measure, and I think people are following him blindly as they do. So need to be a little bit careful about what he says. Gives zero fucks though, does he? Really, he just does what he wants.
I'll tell you what it's called, but I can't say that word.
Can't pronounce it.
Yeah,
hydrochloroquine, something like that.
Oh, hydrochloroquine.
Yeah,
look at you.
I'll make that up. I
think right.
And elsewhere, obviously, we talked about this 500 billion euro recovery fund, which Ian mentioned, and I imagine that's feeding into the bullishness in stocks at the moment. So let's see what happens with the German ZEW at 10 a.m. Steve, going to throw it over to you.
Okay, looking
at something good to show us, have you?
Not really, no. Just going to go with it. Obviously oil. I've drawn this a few days ago, and we've broken above the neckline here. In oil, obviously, remember this gap at 36.50 up to $41, like a $5 gap. So keeping an eye on that. Although today's price action has been pretty bland currently. And the thing on the hourly chart that I picked up with this morning is the potential maybe for just a double top on the hourly chart. We need to get a clear break of this 31.10 level, and then I'll only be looking for a short-term target on that. Copper, as you mentioned, Played
Copper
this
was a great hit, wasn't it?
inverse, inverse head and
Look at
shoulders
that.
actually played out to the point. We put this on the chart yesterday, didn't we? That was the
Virtually
measured move.
perfect, that.
2-4, yeah. I think so. Yeah, a little bit of correction from here. Maybe get another down leg. Look to enter again, but obviously all eyes on whether this suspected recovery, can we call it, is going to continue. Obviously, the stocks are saying no this morning. Just looking at this on the gold, nice reversal in gold yesterday on the daily chart. I'll pop across to here. They're quite bearish candles. The shooting star candle here obviously needs confirmation to provide a shooting star formation. You'd expect a black candle here or a bearish day today to confirm that. So although we've seen a rejection yesterday, the jury's still out on that. Again, I think I'm looking to sell a break in gold below this downward sloping support line here, 17.25, a break below there, and just again not a big target. 17.05, $20 in gold is quite a quick move nowadays. Silver though did outperform gold yesterday and maintained the sort of like push higher. It still formed a shooting star candle, but as you see, the price action has remained elevated. So a little bit more promising, although this is a bearish candle. So in silver, I've gone the opposite way today, looking to buy a dip. So dollar, what's the dollar doing? And we can see the dollar has on the daily chart a bearish engulfing day yesterday. So slightly negative, but it's still got pretty decent support just below, and you've got the cloud as well providing support. So that's all these seem to be a little bit undecided today so far. VIX, remember the VIX, the lower this VIX goes, the more I think the gold becomes a safe haven rather than the dollar. So we've seen sort of sell off over the last few days. That's volatility moving lower in VIX. I think that's about it that I've got. What else on the gold obviously underpinned by the Chinese-US trade friction, but the potential for a COVID-19 vaccine spurred some risk appetite, which sort of led to the sell-off yesterday. Copper prices, that's a 2-month high after the encouraging COVID-19 vaccine lifted the hopes of a recovery. But obviously you got gold and copper sort of like maybe moving against each other a little bit. Oil prices mixed. Brent pulled back from early gains on profit taking, while the US crude extended its rally amid the signs that producers are cutting output as promised, just as demand picks up on a resumption of the economic recovery. So as long as economic recovery continues, or the activity continues, then oil may sort of like fight back towards that 36.5 retest. That's it.
Great, cheers. Thanks, Steve. So let's move on to the gun to the head. So it was the Steve O'Hare show yesterday.
Oh,
absolutely look at that. Nailed it on copper with a 4.5 R. Is that right?
4.5.
No, it was a 3 R win. 3 R win.
Come on.
Sorry, I was looking at
Don't forget, people are watching now.
Sorry, fabulous 3 R win on copper. Really nailed that head and shoulders bottom. So congratulations, Ian. You had a really good win too on cable with a 1.67 R win, and I was stopped on the DAX. But the team together are pushing in the right direction, and there's a brand new high on the P&L up at 110%.
Nice. I know she mentioned team this morning after we've sort of like smashed it out of the park. Did you notice that?
Ian's catching up with me now, so you can see that narrowing of the chart, bit of mean reversion there.
Yeah.
Lovely.
So, yeah, team effort, guys. Come on.
And then Steve-O coming from behind.
As usual.
Oh.
Let's not take the conversation.
9 o'clock in the morning. Jesus.
Sorry, guys. Some people are watching when it's later at night. Some people in the US, so that's all right. We're after the watershed. Okay, so Steve, it's your honour today. Can you pick another winner like that today for us?
Well, no, on past performance, no. That's the answer. But
you've got a 37% chance.
Yeah. So anyway, okay, let's go opposite to what my daily trade is looking to buy a dip in copper around about retesting this neckline potential. We formed a bearish outside bar on the hourly chart. So I'm going to go with this because I'm going to go, it's going to have a, we're going to have a tight stop. So let's get rid of this one here. We don't need that anymore. And what's the high of this candle? The high of this candle is 242.40. So I'm going to put my stop at 242.50. It's because this will invalidate if it breaks the high of that candle. I'm going to sell it at 241.10. Trading right now, and my target is going to be well 238, should I say that? That give me a 2.2 to 1. So I'm looking for a little bit of an AB equals CD correction. Will it go? Let's measure this out. This is AB normally, it's an AB leg normally equals the CD leg. So really the target here is 239.30. So that's where my target should be, because my stop is above this candle. The risk reward would be poor. So I'm just going to go for it. But if it does get down to that level, you probably want to take profit. So that's mine, 238 the target.
Lovely.
Well done. Ian, you ready?
Yeah.
There we go.
Euro sterling. I want to sell most things with a euro in front of it this morning. Monthly chart, massive rejection from the highs. Weekly chart, sort of half decent sort of pullback after this very aggressive move to the downside. Daily chart, we had 30 days of consolidation. We then broke out, but is that an inverted hammer? Can I have that as an inverted hammer? Probably not.
Hanging man, isn't it?
Hanging man. And then we're starting to see a move to the downside today. If we go to this chart, which is the one I really want to talk about, and then I'll just bring it out a little bit. We've got a channel top. We've got a 38.2% fib at 89.87, and we've got exhaustion counts. So I'm selling it basically, aiming for the bottom of that channel. 89.27, 87.43. That'll do. 30 tick stop.
That'll do, donkey.
That'll do. 6 to 1.
Nice.
Zoo survey is going to push that lower. Oh no, it's not. It was 3 minutes ago.
No,
that's
it's
me.
10 o'clock.
Oh, is it 10 o'clock? I thought it was
Yeah.
9 o'clock was you.
No, 10 o'clock.
Okay. Got half a chance then.
Okay, I've been already triggered on a few bits on our intraday analysis today, so I'm going to back one of those. And the one I'm looking at is New Zealand dollar, Japanese yen. There's been a real strong move higher in New Zealand dollar as people have sought riskier currencies. But we've rallied into a 78.6% and the top of this channel that I've got drawn out here on the 4-hour chart. We were triggered at 65.40, so a little bit on side already, about 12-13 ticks, but I'm going to jump on now and tighten up the stop loss and the parameters on that. So selling now at 65.27, putting a stop above those highs there at 65.51. I'm going to target and move back down to these lows, so pretty ambitious for the day, but you've got to be in it to win it.
Oh,
Yes, get
nicks
that
it
in.
again.
So 7.91R if that works out from here.
Lovely.
We shall see. So I have been filled on sterling yen as well, which is doing something similar, but the risk reward is just a fraction better on the New Zealand dollar, Japanese yen one this morning.
Lovely.
So that's my trade for the day. Good luck if you're following them. Any other news? So we had some Bank of England monetary policy stuff yesterday, or committee members talking, suggesting that negative interest rates have had a positive impact in Europe. So that clearly remains on the table as a potential option. And we had some data out this morning as well, didn't we, from the UK? Unemployment.
What was it? Yeah, I was going to say. Let's have a look.
So the UK furlough scheme has dragged wages down but kept employment to a minimum, and it actually fell to 3.9% in May.
Kept unemployment to a minimum, or employment to a
Yeah, it's gone from 4.4 to 3.9%.
Okay. UK jobs made a sobering reading this morning, with the claimant count hitting a record high of 856,500 for the month of May. And unlike the US, earnings in the UK failed to highlight the very different policies on either side of the pond. Obviously, they've opted for the sort of helicopter approach by giving everybody a check, whereas we've obviously done the furlough scheme, which has kept the wages higher as a result.
Yeah, I was having a
Yeah.
conversation yesterday about that, and I thought that everybody in the US was running out and buying plasma TVs, but supposedly a
Or
large
spunking it on the stock market.
yeah, I can say look, supposedly a large percentage are buying stocks.
Is that true? Is it?
Yeah,
Seriously?
Okay. Speculating on stocks.
yeah.
Jesus Christ.
Well, that's probably boosted the reason why stocks are going crazily higher as well. Then all that new money being chucked in there, as well
Well,
as
that
from the Federal Reserve.
freebie cash.
Yeah, nice. So ZEW at 10 o'clock. The economic sentiment index is expected to drop to -14 from 28.2. So keep an eye on the euro crosses. And then at 1:30 we have the US housing starts and building permits for the US, and that is expected to fall 30% month on month. So pretty staggering numbers, but clearly it seems to be being shrugged off by risk assets in a minute. Although the selling is starting to pick up a little bit in stocks, it looks as though, this morning.
No,
Anything else, gents?
I was going to see if there's
No,
any
good
news.
at her.
No.
No,
Let everyone get to trading. Come on, they're desperate for it.
Sorry,
yeah,
guys. Sorry to
sort
keep
of
you up.
holding them up.
yeah.
Let you get back to it. Right, let's wrap it up then. Good luck with your trades, guys. Have a great day, and we will catch you tomorrow.
Enjoy.
Cheers. Bye.
Cheers.